Hello, welcome to this video on corporation tax and the dates of payment of corporation tax. So for companies that are small, medium or large, the rate of corporation tax, for example 20%, it might be uniform right across companies irrespective of their size. So the rate of corporation tax, the percentage that they have to pay may be the same, but the dates on which they have to pay those are very different. And that's what this video is going to look at, the dates of payment of corporation tax. So I have the dates here, and these are the current dates. If you're a small or medium company, you pay your corporation tax after your year end, and you have 9 months and 1 day after your accounting period to pay that corporation tax. So the accounting period ends, you have 9 months and 1 day to assess what the total taxable profits are and to make your corporation tax assessment. And to make the payment. But if you're a large company, you're actually paying your corporation tax on the current year estimated profits. So while you're actually in your trading year, you're starting to pay your tax. So you're estimating, you're forecasting your year's profit, and you're starting to make tax payments on the profit before the year is actually finished. So 6 months and 13 days after the start of the accounting period, here it was after the end, 6 months and 13 days after the start of the accounting period, you're actually signing a check or making a bank transfer for the first 1 quarter of your corporation tax for that year, and the year hasn't even finished. You're actually only just over halfway through it. Then 3 months later, you have to pay another 25%. 3 months later, you have to pay another 25%. And the last instalment is payable 3 months and 14 days after the end of the accounting period. So you're really paying your corporation tax in a very accelerated fashion if you're a large company. So while, as I say, the rate might be the same, the way you pay it's different. So then the question is, well, what is a large company? What is a large company deemed to be in terms of the rules for this? Well, a large company is a company under the current rules that has a profit of over £1.5 million. So that's essentially the golden rule and this is a key figure. Test for a large company. Do profits exceed 1.5 million? If they don't, it's a small or medium company. End of story. If they do exceed 1.5 million, then it's large. So, but there's a second test. So normally if it's large, we just assume that it goes straight into this, but there's a second test before we go straight into the large company payment schedule, if you like. And the second test you have to ask yourself is this the first year it's large, or was it a large company last year too? So we know it's a large company because it's got over 1.5 million in profits. Just go back and look at the previous 12 months. Was it also a large company last year? And if it wasn't a large company last year, so it's now, for the first year, its profits have increased, it's doing better, it's now got profits of over 1.5 million for the first time. So was it a large company last year? No. So it's the first time it's got over 1.5 million in profits. Then there's a subsequent test, are the profits over 10 million? So we're really asking ourselves is this a company that's been large for the first time and has actually become very large in its first year? And if its profits are over 10 million and its first year as a large company, then it's going straight into this sequence of payments, as you might expect, because its profits are going to be quite large. But if it wasn't a large company last year and its profits are less than 10 million, which is probably quite the majority of cases, then for the first year of being large, it can pay its corporation tax 9 months and 1 day after the end of the accounting period. So we're not saying that it's become a small or medium company. It is a large company. It's got more than 1.5 million. We're just saying that in its first year of reaching the 1.5 million, as long as it doesn't go over 10, then it doesn't have to go straight into this. It has a first year, I guess the first year it has the ability to pay it 9 months and 1 day after the end of the accounting period, and then it goes into this. So was it a large company last year? If it was, so it's large this year and last year, straight into this. So if it's a large company, it's because its profits are over 1.5 million. Just look at last year. and if it wasn't large last year and it's large this year, then assuming the profits are less than 10, you can go into this for the first year of being large. Otherwise, you're into this here. So that's kind of the first thing I wanted just to cover off. So just remember that the test is, do profits exceed 1.5 million? So let's look at a company A, which owns company B and company C, and it has more than 50%. Say it has 80% of this company and 60% of this company. So here we have three associated companies. This £1.5 million figure is still the threshold, but now it's divided by 3. So now we have a target. If any of those companies exceed 500,000, if any of these companies have a profit of over £500,000, they're now a large company. So the 1.5 million is split by the amount of companies in a group, as long as there's more than 50% of an interest, controlling interest from the parent. So just be aware of that, because it brings the amount down. So for example, if company B has a profit of 300,000, C had 200,000, and A had 1 million, then A has to pay by installments, but B and C don't. Okay, now let's just take that one step further. Let's say A, B, and C. Let's say A also, it bought D and it bought E. And let's say it bought F. So company A, it owns B and C, and it bought D, E, and F. Let's say it sold B. So during the year, company A sold its interest in B completely, retained C, and it bought D, E, and F, and it has more than 50% interest in all of these. So then what is that 1.5 million? What do we do with this 1.5 million now? Any company that existed during the year is deemed to exist in its entirety through the year. So there are 6 companies here. So we take the 1.5 million and we divide it by 6. So this £500,000 is now 250. So any of the companies with more than £250,000 of profit in the year are now deemed to be a large company and have to pay by installments. There's still the question, was a large company last year, that you have to go through, but this 1.5 million is divided by any company that existed during the year of which there was an interest of over 50%. So just to summarise, it's a slightly complicated topic, albeit it's a very small topic within corporation tax, but it's one just to get right. Large companies have to pay by instalments during the year. They're large if the profits are over 1.5 million. If it's a group of companies, divided by the amount of companies in the group, even if some of them were sold during the year, as long as they have more than 50% ownership, and divide that equally across the companies. And any that are above that will have to pay by installments, and any that are below it are small and medium. So I hope that helps to clear some of this area up, because it can be quite tricky just to get your head around initially. Thanks for watching.